How does this affect the markets? And what do investors need to know? Let's bring in our all-star panel, Jim Awad of Plimsoll Mark Capital, Andrew Schiff of Euro Pacific Capital, and Kevin Kerr of Kerr Trading International. Thank you all for joining us.
Thank you.
Now, let me just throw this right out there. I mean, it sounds like a deal, but it is October. So is Jason or Slasher, are they still in the woods? Is this thing over by any stretch of the imagination?
Not by any stretch. You'll have a relief rally, which we've had, and a period now of relative peace where we can concentrate on economic fundamentals, earnings, fourth quarter guidance, the Fed, and all the other issues. But it's back to the battleground probably at the end of November, early December. The markets will start to worry about it again.
Now, we've heard a lot of this talk, Andrew, about delusion on the part of the Republicans, saying that they're not going to be able to get everything that they want in this deal, specifically pointed at the Tea Party. But there's plenty of this delusion potion to go around,
well, the
right?
delusions that most people are talking about, that the Republicans, the Tea Party Republicans, were delusional in not thinking that they could push the country into default and not have severe economic consequences as a result. There would have been, clearly, if there would have been a default and suspension of payments, whether to debt holders or to recipients of federal payments. But the greater delusion that I think that the president has and the Democrats have is that somehow borrowing more means we're paying our bills. That we're going to take out a bigger Visa charge to pay off our MasterCard, and somehow that's responsible, and we're paying our bills. We're not. I mean, it's pretty clear that by this action and by prior actions that America is politically or intestinally incapable of confronting our enormous fiscal challenges. So the fact that we kicked the can down the road again and we made Jason go back into the woods for another day or two causes this relief rally. But these problems are going to come back with a vengeance in February. Apparently, no, it's January 15th now. And who should have any belief that we'll be any more successful next time around than this time? In fact, next time, I think the Obama is going to take away that he doesn't have to negotiate with Republicans at all. He can run the table and have his way, and I think that's what's going to happen next time.
Well, we could get a little bit lucky here, where everybody is so exhausted and wants to take some cover in the political center, where most of the country is, and you could get some sort of an agreement similar to what happened with the sequester, where we've really reduced the deficit a fair amount. So I agree with you. The risk is that they're going to fail next time, but there is a chance that they act like grown-ups, like Washington used to, when you have strong leaders and compromise that results in middle ground legislation.
Jim, let me bring you in here. The U.S. has already gotten warnings from Christine Lagarde of the IMF, and Fitch has lowered their rating, their credit rating. What kind of damage has this done that U.S. lawmakers have allowed this to go to the brink and could very well do the same thing again in January?
These 11th hour kind of dramas that we constantly seem to have in the government, send a message to the rest of the world. I mean, look, China is now very openly talking about creating a new reserve currency. This isn't just for fluff or for fluff. It's real. They're talking about, look, the dollar may not be the best reserve currency. Is it going to happen overnight? No, it certainly isn't. But is the reality there that they are saying, look, we need a different currency? And so
Kevin, as I apologize first, it is Kevin Kerr that we're talking to, and Jim is here and Andrew is here. But if I can stay with the question in terms of the international community and what this does to our street cred.
The China news agency came out yesterday, or earlier this week, with a very strong statement, probably the strongest I've ever seen, about being concerned about getting paid back on the trillions of dollars they own in treasuries. Also, it came out yesterday that in the last quarter, they accumulated $160 billion worth of new treasuries, when people thought they were dialing back their purchases, and they're not. So they've got to be very frustrated with this end game. And I think they're actively looking for a post-dollar world, and investors should actively be looking for a post-dollar world as well.
Well, and let me tell you the implications of that for this country is, if we are not the only reserve currency, then our currency will go down to reflect poor fundamentals if fundamentals remain poor in terms of how much we spend and how much we take in. And that will result in a decline in the living standards of Americans because it will cost more to import goods from overseas. So the worst thing that could happen to America is that the world economy becomes de-Americanized, as the Chinese said, because the only reason we've been able to get away with everything is people had no choice but to use our currency as a reserve currency. But make no mistake about it, this will take a decade or two to happen.
Talk to me about the impact that small business has been getting from this and their reaction to lawmakers in Washington. Apparently, some polls show that small businesses that were at one time in the camp of the GOP are now feeling very angry about all of this brinksmanship.
Well, do you want to go first?
Well, I mean, it's very easy to see. It's people, businesses, and think short term. I mean, it's very easy to see if the government was shut down tomorrow and these federal employees were to be laid off. Those are my customers. I'm going to lose people coming into my store. It's going to create it's going to make interest rates go up tomorrow, and that's an immediate problem. So it's always very easy for either privately held corporations or public corporations to look next week, next quarter. Of course, it's in the long-term interests of our country to tackle these demons. Unfortunately, we're bringing in new demons with Obamacare, which I believe has an enormous amount of bad incentives that will be terrible for the economy over the long run. But we're not tackling our demons. At least in Europe, I mean, they're going through some pain because they're dealing with their budget, their fiscal imbalances now. So I think it's natural for
but let me jump in right there. But some of the things that Europe has been doing have been seen as no words here in the States. Things like austerity, things like raising the retirement age. These are things, obviously, that have to be considered but are not going to happen, right?
Well, we had our own austerity through sequester, but it's a short-term austerity. What we have to have is the long-term austerity to attack the entitlement programs, and that's the real issue here, the long-term issue. But the direct answer to your question is whatever the level of economic activity in this country is, whatever the PE ratio of the market is, it would have been higher if people had more confidence in the government than the government deserves with their theatrics this last couple of weeks.
Okay, thank you much. Well, you guys are going to stay with us, and we'll try to get Kevin Kerr back. Today, we would like to welcome our viewers in Washington, D.C., the Arise News Channel. They can now watch us on Channel 12 of the MHZ network. You can see us and the rest of the Arise team throughout the Washington, D.C. region, including the suburbs of Virginia and Maryland.